everyone, and welcome to another edition of the Property Update. I'd love to introduce you to our property guru and my co-host, Tom Haigh from My Money Sorted. He's a licensed buyer's agent with a 16-year career in property and construction. So, hey Tom, how are you?
Hey Jackie, really good. Great to be with you.
Thanks for being here. All right, let's dive straight in. My first question for you, what's hot and what's not in the property market?
Well, in terms of what's hot, I can tell you those New South Wales Blues, Jackie, coming off the back of a pretty solid game 2 win, I've got to say. Now, I know we are heading up to Suncorp, so I don't want to be crying too early, but all I'll say is bring on game 3.
The first 20 seconds in and you've thrown a dagger. What is this?
I've got to take my chances, Jackie. No, in all seriousness, what's hot? I'm going to burst right out of the gates with this one. Toowoomba. Now, this is an insight with thanks to Terry Ryder from Hotspotting. So Terry was recently a guest on the Australian Property Show. Fantastic guy. If you haven't seen Terry's work, check him out. He may be a Kiwi, but as far as the Australian property market goes, there's few that come close to Terry in terms of being ahead of the game. So Terry runs Hotspotting, which is a fantastic resource for property investors that looks at trends and emerging markets for investors across the country. Now, if you don't know where Toowoomba is, and it's one of Terry's favourites at the moment for coming years, it's roughly a 1 hour and 30-minute drive west of the Brisbane CBD. Now, here's what's been happening in Toowoomba. The Toowoomba property market continues to be one of the absolute standout regional markets across the country over the past 12 to 18 months. Now, it's a market that's seen double-digit growth over the past 12 months and has seen more than 14 consecutive months of growth, which is staggering. So, obviously, certainly an attractive location for investors and homeowners alike. And here's why it is so hot. The median house value in Toowoomba sits just at over 600K, so incredibly affordable by comparison to most Australian cities and even some of the major regional markets. So there's a key, theme that we'll talk about often on the show, which is what is it that's driving this surge, this price growth? There's a few things, and similar to the rest of the country, for Toowoomba, there's a bit of a supply-demand imbalance. So lots of people flooding in the area wanting to call Toowoomba home for a variety of reasons that we'll unpack in a moment. It's an affordable location, and it has a stable and diverse range of employment opportunities for people moving into the region. So this is supply demand, really that's been influenced by a steady flow of new arrivals from Brisbane seeking to relocate and also some overseas migrants seeking employment opportunities. Now that's putting a fair bit of pressure on levels of dwelling and access, of course, with supply continuing to be hampered by trade shortages and the cost of construction that's affecting all those new builds across the country. So Toowoomba, there's a lot going on there, as I said, tipped to have a substantial population growth to 2050 over the next 25 years. It tipped to grow from 180,000 people up to 235,000, Jackie. So massive increase in population. And obviously off the back of that comes lots of opportunities for investors and first home buyers. The interesting thing is the contrast to a suburb. Let's move on to what's not for a moment. And I tell you what's not, the price of beer at the Beach Hotel in Byron Bay, Jackie. I was up there recently with my family and I just about passed out when the bartender told me the price would be $15 for a schooner. So there you go.
That's interesting. What's not hot list.
Firmly at the top of the category, that's for sure. But the interesting thing, about Byron Bay, other than the fact that the hippie backpackers visiting the town will no longer be drunk on the streets, they'll be completely sober due to the cost of beer. I can tell you what that is. House prices. It was only 12 months ago that people were talking about the demise of the property market in Byron Bay. Now, they're calling it the Chris Hemsworth curse, and lo and behold, things are looking up for Byron. Chris Hemsworth has officially been banished from the town. Only joking. I think he might move to Brisbane. Median house prices rebounding substantially from their 2023 low of $2.3 million to a recent high of $2.8 million. So that's a fair kick. Now, it's still roughly $700,000 below the COVID-induced peak of 2022, but it must admit it's still a fair way above the $1.4 million which was the pre-COVID median house price. So it's not all bad news for those who have invested their life savings on a whim, following Chris Hemsworth to the sunny town of Byron Bay. But yeah, interesting contrast. Obviously, Byron often gets lumped into the Southeast Queensland category by virtue of its proximity to the border, and certainly things look to be on the up for Byron, along with it the price of beer, as I said.
Yeah, they follow the same trend. And speaking of trends, can you run us through some key trends and their driving factors that you're seeing at the moment?
Yeah, look, it's really interesting times out there at the moment. I think there's been a lot of ongoing discussion about high inflation, economic uncertainty, of course, and a lack of supply solutions around new housing. But I think what we're finding is that monetary policy, so what happens to the cash rate, won't be the main factor affecting housing and the property market in 2024. It really is bucking the trend, the expected, downturn, and also the expected rate cuts. So we just have not seen those, and the Reserve Bank came out at their recent meeting on June 18 and advised they're intending on keeping the cash rate steady, but they did couple that with a statement that they're not ruling anything in or out. So read into that what you will, but certainly there's a lot of economists out there that are now predicting that any rate cuts won't be seen until 2025 or beyond, which is an interesting thing given some of the predictions that we saw late in 2023 were very different to that. So that said, price growth across the country has definitely slowed for the most part on average. There are still some cities that are outperforming some of the others. We're going to unpack those in a moment. But all in all, this challenge around cost of living, around cost of debt, of course, mortgage repayments, is really being offset by this continued population growth and, of course, tight rental markets. So I guess what we're seeing is rental growth is expected to continue to help offset those higher mortgage repayments for investors, while the demand for entry-level properties remains incredibly strong. So despite what we're seeing there as headlines about potential doom and gloom on property prices, I witnessed this firsthand, working on behalf of a property investor client just last week who had a goal of purchasing a freestanding home in Newcastle. They had an investment budget of $800,000. Now, this price point is absolutely red hot. And with hordes of first home buyers fighting it out with local and out-of-town investors who are chasing affordable investment opportunities with strong growth prospects. Now, at that first open home for that property, there ended up being about 60 groups that were in attendance, which is absolutely insane. So lower end of the market, a hell of a lot of activity. Upper end, and I say upper end, Jackie, is crazy to say, but that's now 2 million plus these days. Things are definitely a lot slower. In terms of, the state of the markets and what we're seeing out there, now the majority of the cities are still in the rising market stage. So there's very few that have entered sort of that peak or top of market cycle, which obviously indicates that there is growth still to come, which is kind of scary if you're not yet in the market, of course. So it's a little bit of a sobering thought to see some of the annual change in prices. So again, one of the biggest challenges for people that aren't in the property market is keeping pace with that price growth. It's very difficult to save in line with where we're seeing median prices grow in value. Take Perth, for instance, where the average annual change in dwelling values, so units and houses combined over the last 12 months, has been 23.6%. According to some recent data from CoreLogic. So someone trying to get in, very, very challenging to keep pace with that, of course. Now, it hasn't all been consistent across the board. Tasmania in particular is really the only state that's seen negative growth. So Hobart in particular is down by 0.1% on prices this time last year. And of course, as we reported in our previous update, there are some other really strong performers like Brisbane and Adelaide at the moment. Melbourne really dwindling at the back of the pack at 1.3% growth in the last 12 months, so very neutral, the market in Melbourne. Sydney is on the up at the moment with a 6.3% increase in median dwelling values over the previous 12 months. So that's the main update on trends of what's happening out there in the market. And of course, we remain optimistic that there will be some changes to that cash rate, which will hopefully signal a bit of relief for homeowners and investors out there who are really struggling with those mortgage repayments, but certainly time will tell.
Yes, absolutely. Watch this space, as we all are. And so can you run us through the clearance rates for each capital city, please?
Absolutely. Yeah, look, not a massive shift from the previous month's update. Sydney, we had a clearance rate of 66%. So that's for the week ending the 1st of July. So the week just gone past. Melbourne's at 58%. Brisbane at 42%, which is a lot further back. Now, a lot of those properties are selling. Pre-auction in Brisbane continues to be a really buoyant market. Canberra at 51% and Adelaide at 77%. So not major movements from previous month. Pretty consistent approach across the board, but certainly when we saw Melbourne at fever pitch with clearance rates in the high 80s and even 90%, compare that to the 58% that we've seen recently, it gives you a real feel for the difference in how the Melbourne market's performing, and obviously Sydney not too much further ahead at 66%.
Yeah, absolutely. And so now my last question, what are some upcoming suburbs for first home buyers in Sydney?
Jackie, I'm glad you asked me that question. I really had to do my homework for this because it is incredible to see where house prices are in Sydney today. Now, we touched on dwelling values earlier, which roll in, of course, apartments and other kinds of housing other than freestanding homes. But in terms of housing, or median house price in Sydney, we're standing at 1.4 million today, which is kind of nuts. Now, there's very few buyers who actually can afford a median priced home in many city suburbs, of course. And as we're seeing, those that have got aspirations to do so are finding it really challenging to keep pace with the rate of capital growth. So for first home buyers in particular, there's some significant challenges. Affordability issues are really pushing many of those buyers out of Sydney Metro. But there is a silver lining to all that. Numerous suburbs in Sydney still offer a relative level of affordability, and Domain actually published a really great housing price report recently, which actually shows that there are roughly 200 suburbs in Metro Sydney where the median house price or unit price remains below the $1 million mark. Now, one of the noticeable trends in that is the distance or commute to the CBD. So it's really important to have some sort of context to that. Naturally, home buyers want to be as close as possible to the great amenity that the city offers, and of course want to have a fewer minutes in that commute time to work each day. So a number of these suburbs, and we've picked a few at that $800,000 mark, which tends to be a little bit more favourable for those first home buyers, they do tend to be a bit further afield. Now, that very issue has seen or given cause to the rise in rent vesting, which I'm going to touch on in just a moment. But three of the top suburbs that we identified in our research, Jackie, was Eaglevale, which is southwest of the CBD, roughly a 45-minute to 1 hour commute, depending on traffic, of course, where the median house price is $790,000. We've got Richmond to the northwest of Sydney, similar commute time, roughly an hour, provided the traffic's okay. Median house price is $790,000. And we've got Roos, which is southwest of Sydney and just under an hour commute. Median house price there is $795,000. So I guess what that report for Domain is really highlighting is that affordable entry points, if you can call it that, still exist. It does mean that buyers are needing to push further out into the burbs to be able to get that foothold in the market at that price point, particularly around that 800K mark. I touched on the rent vesting piece. Should we unpack that a little bit further?
Let's go for it.
Fantastic. So this issue of, I guess, housing affordability is not isolated to Sydney. It's a challenge for people in every major city, to be really honest. We had a look at Perth and the performance of that market over the past 12 months. There'll be plenty of people that are now first-time buyers in particular that are getting priced out of the cities and are needing to consider their options. Now, the challenge lies in the fact that many people are really happy where they live. They might have grown up close to the city. They might have, I guess, all of their family, friendship network close by. They might be close to their workplace where they can walk or ride to work, and they might be prioritising some of the lifestyle benefits of remaining in that area. Now, if they can't afford to buy and continue to rent, one of the challenges is at some point they'll be eventually priced out of the market. So a number of those first home buyers have shifted their focus to rent vesting, which again is rising in popularity. Rent vesting is effectively buying a property in a location where you don't necessarily want to live, but you can afford to live, and it's got good rental income prospects, good capital growth prospects. And what that provides the individual is, again, a foothold in the market. So that's their opportunity to obviously build an asset base, one that's going to keep pace with what the market's doing so that obviously they don't get completely priced out. We are tending to find that the price of rents in those locations where people want to be living, a heavy discount to what they'd be paying in mortgage repayments. So from an affordability standpoint, they're certainly a lot more palatable. So effectively renting where you want to live and then buying that property in a location with really strong growth prospects. At the moment, we're seeing, again, we'll focus in on Sydney for a moment, given the theme of this particular conversation, some of the most popular locations for Sydney-siders to be rent vesting are areas like Newcastle and Wollongong. If we extend it further afield to somewhere like Melbourne, that's Geelong, the northern suburbs, and also the southeastern suburbs leading down towards the Mornington Peninsula. So I think we will continue to see that as a really strong and emerging theme as this challenge of housing affordability continues to become an even greater one. So great option for people out there who are getting frustrated. They're feeling like they're priced out of the area that they want to be buying and perhaps living in. Important to note, of course, that rent vestors can't necessarily get access to some of the first home buyer support schemes, but you do need to weigh that up with the potential benefits of having a property that's going to give you that foothold in the market, as we said.
Yeah, sure. So what I'm getting from this is I'm investing in Toowoomba, but still living in Brisbane.
That's exactly right. To bring it right back to obviously Terry Ryder's tip there from Hotspotting. G'day Terry, if you watching today. It's again a very popular strategy for those people that again have reached the point where they're just feeling frustrated. Their savings just simply cannot keep pace with the market in their local area. Again, there's been a shift recently from standalone homes to units. That's been a real theme. And now this is an extension of that, where people are saying, you know what, we'd like to have some land. Land grows in value typically over time. We'd like to own a home somewhere. It may not be where we necessarily want to live right now, but at the very least they're in the market.
Yeah, makes sense. Well, Tom, thank you so much for your insights and for your time. And I guess we'll see everyone next month for another installment of the property update. So thank you so much, Tom. Thank you for everyone watching, and we'll see everyone soon.
My pleasure, Jackie. Thanks very much.
Thank you. Bye.